Hello, my name is Teri Williams, and I am President and Chief Operating Officer of OneUnited Bank. And I'm excited to join you today to talk about this subject that is near and dear to my heart, advancing the financing model to achieve racial equity. I'm going to take you through this presentation, and then I think at the end, we're going to have an opportunity to answer questions. Okay. Sorry about that. Yes.
Is it moving forward?
Yes, it is. Okay. So just as an introduction, OneUnited Bank is the largest Black-owned bank in the country. A lot of you probably have not heard of us, but we have offices in Boston, Los Angeles, and Miami. And we actually were 4 Black-owned banks that were rolled into one. So I'll tell you a little bit about our history. We're also a CDFI, or a Community Development Financial Institution, and have lent almost $1 billion in low to moderate income communities over our history. We're the first Black digital bank. We actually introduced our online presence at oneunited.com in 2006. So we've been doing this for over 15 years. And in fact, today, although we have branches in Boston, Miami, and Los Angeles, most of our customers come to us through our online channels. So wherever you are, you can open up an account or go to our website and learn more about the bank. In terms of myself, I am the President and Chief Operating Officer, but I'm also the majority owner with Kevin Cohey, who is my husband. We're a husband and wife team that have been doing business, been partners in business for over 30 years. And we've been with the bank. We actually purchased the bank 26 years ago. Our senior management team has been with us for the most recent joined us 10 years ago, and some of them have been with us for the entire time that we've been with the bank, which is 26 years. As I mentioned, we've grown the bank. We acquired a community bank in Boston, then another one, a Black-owned bank, and then another community bank in Miami, and then 2 in Los Angeles, and rolled those 4 banks into one, and then added our online presence to become the largest Black-owned bank. In terms of my personal passion, which is why I show this picture, is that I actually wrote a book called I Got Bank, and my personal passion is how to instill financial literacy in urban youth. And I think you're never too young to talk about money and to learn good money decisions. I want to say that this presentation is going to focus on racial equity, but it's also going to focus on housing. There are other areas that we could cover, whether it's income, employment, education, and even business and entrepreneurial opportunities. But because this is a housing conference, I am going to focus my recommendations on housing. To just tell you the agenda so you know what to expect for this presentation, I'm going to talk give you a little bit of background on housing. I'm then going to share solutions to make housing more racially equitable. And I have 10 solutions that I'm going to share with you. And then I'm going to leave an opportunity for questions. What I hope from this conversation, and I do hope it's a conversation, whether you're conversing in the chat or you're going to talk about it, even after this presentation, I really hope that this is a conversation that you'll continue to have and not sort of look at it as sort of, either you like it or you don't. Because there are a lot of things in here, a few of them that, you may think of as being radical, but they really are solutions that I have, and as well as issues that I have come to understand from my years of experience focusing particularly on the Black community and the low to moderate income community. So getting to the background. There's a problem. There is a homeownership gap between the Black and white community in the country, as well as in specific cities and states throughout the country. And that this disparity in homeownership is not improving. As you can see in this chart, which begins in 1994, actually about the time that we came to OneUnited Bank, up until today, you'll see the difference between white home ownership and Black home ownership, as well as Hispanic and all other races, really has not changed in terms of that gap. In 1994, it was 70% white home ownership and about 40% Black, or 30% difference. And today, it is still about a 30% difference. So it hasn't changed. And that difference in home ownership is a big contributor to the racial wealth gap. There's a lot of news about this, about the racial wealth gap today. And as you can see, housing is a contributor, as you know. I say as you can see, as you know, housing is a big contributor to wealth in America, and that home equity is the biggest reason that there is this racial wealth gap. If you look at the racial wealth gap today, you also see that it is not improving. You could go back to 1960 and see that this wealth gap has not improved. So if you're in the housing area, which most of us in this session are, you could ask yourself, what are we doing? Because whatever we're doing, it isn't working. And it is something that needs to be addressed, which is why this session is so important. Give you some of my experience, sort of anecdotal stories. This is what's happening in Boston. There was a study that was done by the Federal Reserve of Boston called The Color of Wealth. And it showed really what you're seeing on this screen, that the Boston white home ownership is above average. You can see it's almost 80%. And the Black home ownership in Boston is actually lower than average, or about 30%. So whereas the country has about a 30% gap between white and Black home ownership, in Boston, that gap is 45%. So here in Boston, which is where I am at the moment, there is an even bigger issue. And what that translates into, which again, this also comes from that same study. And by the way, I do have a PDF of this presentation. I will check with the team that's put this conference together to see if we can get this to you. And in the presentation, it does have links to these various studies so that you can actually read them. But this particular chart is just amazing in a not good way. You can see that white Bostonians have a net worth of $256,000 to around $250,000, whereas Black Bostonians have a net worth of $8. That's not a typo. It's not 8,000. There's not an 8K. It's 8. So, sort of going back to this issue of home ownership, it has had a significant impact on the wealth gap in Boston. One of the aspects of the housing disparity and just sort of the issues that we face as a community, as in the Black community, is this timeline. I think it's, people are always surprised when I say this, but the Black community has only been legally free to live and work where we want for about 50 years. We've been in this country for 400 years, but we had 250 years of slavery. We had 100 years of Jim Crow. And it only has been since the Civil Rights Act and the Fair Housing Act was passed, which is in 1968, that the law says that you are prohibited from discriminating against people due to their religion, their race, their national origin, their gender, in the financing, the rental, the sale of homes. So when you look at this history and these many, many years of discrimination, to some degree, it's not surprising that we would not be able to close that gap over this period of time. The other aspect of that timeline is that even when the Fair Housing Act was passed, which prohibited redlining and prohibited federal mortgage discrimination, it did not result in any investments to address the historical discrimination that we experienced for the first 350 years that we were here. There's a great article called Race, Housing, and Displacement in Miami, another city that we're in. And it really does show the connection between the historical patterns of racial discrimination and the modern disparities that we are experiencing today. So when you look at that racial wealth gap or that housing gap, you can actually see what caused it based on our history. So what are the solutions? Sort of that's the background. What are the solutions? What is it that we can do as a community to solve the problem of the housing gap and the racial wealth gap? And as I mentioned, I'm going to give 10 solutions. Starting with an overarching comment before I get to the 10, which is that to advance this financing model to achieve racial equity, you must be an anti-racist. Now, for some of you, who attended the session earlier with Ibram Kendi, you may know what I mean by this. For others, I actually wrote the definition. And one of the things he talks about is that no one wants to be called a racist. No one views themselves as being a racist, and it's such a negative term. But one positive term is being an anti-racist, to actually creating and supporting policies that really are to create racial equity, to actually sort of putting your attention, your mind behind how do we close the racial wealth gap? How do we achieve racial equity? And he has a book, How to Be an Anti-Racist, that I would highly recommend. And you're going to see at the end of the solutions why I start with this overarching point. So if you don't understand it at the moment, I'm going to come back to this after I go through the 10 solutions. Solution number 1. Improve down payment assistance programs. There needs to be more programs. Surprisingly, not every city, towns, every state has a down payment assistance program for first-time home buyers. But they need to, even in cases where they have them, they need to be improved through larger grants, higher mortgage caps, especially given where home prices are today, and shorter terms that are needed to remain in the property. A lot of times they'll say in order to participate in these programs, you have to remain in the property for 25, 30 years, which very few people do for their first time home. So there has to be longer terms that are available. To give you an example, in Miami, you can get up to $102,000 in down payment assistance. 102. So when I compare that to what's happening in other cities, that is a very generous program that is very helpful. So one of the things to look at is improving down payment assistance, because again, a lot of people have been shut out of the market and they need assistance to become homeowners. Second solution, granting municipal infill lots in the Black community to Black developers with requirements for affordable housing. And I say specifically Black developers because Black developers are more likely to hire Black contractors. They're more likely to understand the community and what the community needs are for housing. And again, we'll get back to that anti-racist point, but if you're neutral in terms of what you're doing, it's not going to effectively move the dial. So that's also why I say Black developers. But the idea of granting municipal infill lots to developers for affordable housing, regardless of who the developers are, has the opportunity of creating more and better housing opportunities in the Black community. Miami, again, I'm going to use as an example, has granted 42 lots to developers, and it's lots that they can also build multifamily property on as part of their housing initiative. And again, there's a link to that law that they passed that gives them the ability to do that. Next solution, I'm gonna move to California now. Changing the zoning rules to permit accessory dwelling units. Some of us know of these units as, mother-in-law suites, granny flats, backyard cottages, but there is this opportunity to create more housing by allowing homeowners to build these units on their property. And since California passed the law in 2016, they've seen a huge expansion in the amount of ADUs, as they're called, that have been built. An 11-fold increase in the permits that they have, from, as you can see here, 1,200 to 14,000 ADU units. So it's another way to create housing options in our communities. Next solution, fixing the appraisal process. There's been a lot recently about this. The reality, and this is something that we see at OneUnited Bank, is that there's a problem with discrimination in appraisals. We have had to send appraisers back because their appraisals were not consistent with what we were seeing in the community. They were undervaluing properties in the Black community. But we, as a Black-owned bank and as a sort of trying to move the dial on this racial equity, have a review process for appraisals that looks at equity. There needs to be better training of appraisals. There's been all kinds of stories where, sort of the same home in a Black community is undervalued from homes in white communities. There's also been situations where homes in white communities that are owned by Black people are undervalued. There's this thing in the Black community called whitewashing, where you take your home and you eliminate any clue that a Black person lives there to maximize the value of your appraisal. And so that notion that appraisers would come in and look at a home and value it less, even in a white community, is well known in the Black community. The Brookings Institute did a study that shows that homes in the Black community are undervalued by about $48,000 for a total cumulative loss to the Black community of $156 billion with a B. So it's a huge problem, and requiring an equity review of appraisals is an important element to solving the racial equity gap. Bloomberg also, you'll see a link there. The Appraisal Institute is actually now starting to agree that they have a problem in terms of appraisals and biases in appraisals. And so they are also trying to address this. Next solution, credit reports. One of the things that we see a lot in our community is that the credit is lower, their credit scores are lower, and in some cases, because of the credit score, they're not qualifying for a home. At the same time, those same individuals are actually very good at paying rent. And there's sort of a hierarchy of, their payments. They make sure they pay their rent, and they pay their rent on time, but they may not be paying that credit card. And because they're not paying that credit card, their credit score is low, even though their housing payments are on time and consistent, but they're not included in credit score. There is a need for credit bureaus to start to at least provide avenues for rent payments to be included in their scoring, and to have what I'm calling a housing score in terms of how well people pay for their, how well they pay for their housing. Fannie Mae just came up with a new program that allows people to actually include their history of rent payments as part of the credit decision. So an individual who's applying for a mortgage with Fannie Mae can say, yes, I'd like you to look at my history of credit payments to help me sort of better score, I guess, and get approved for a mortgage. Or they can decide not to do that. It's their option. So it can only help you with Fannie Mae. It can't hurt you, but it is a good tool that we are going to be using. In fact, I don't know if it's been implemented yet. I haven't checked with our team, but it's a tool that we're going to be using to help people qualify more for home loans. Another solution, parking. And you say, what does that have to do with housing? Well, there have been many studies that have been done. There's one that actually included Seattle that has shown that there's an overinvestment in public parking in downtown areas, and an underinvestment, this is the part I'm adding, in housing, in affordable housing. And what they're finding is that a lot of the public parking downtown, and this is before COVID, so this study was done before COVID, I'm sure it's gotten worse since COVID, but a lot of the public parking is vacant, and that there is a need to build less of the public parking, maybe even sell some of those public parking lots, and reinvest those dollars in affordable housing. I give a link to this study that was done. And as I mentioned, and those of you in Washington, that Seattle was included in this study, but reducing the investment in public parking is another opportunity, and reinvesting those dollars in affordable housing is another solution. Property taxes. Again, studies have been done. Everything I'm sharing with you is actually based on studies, as well as our, my own personal experience. There is a gap between the property taxes that the Black community pays and the white community for the same house, even. And there are many reasons for this. There's an appeal process that the Black community doesn't take advantage of as much. That's one of the reasons. But there's also a way in which the value of homes is, no, I should take it back. The appraisal, the assessment value of homes compared to the actual value of homes is not in sync. And what I mean by that is that the value of homes has gone up, but in white areas, but the assessment value has not. And so that gap between the value of the home and the assessment of the home is actually out of sync with what's happening in the Black community. So this increases the cost in the Black community of owning a home, which again is a huge equity. There was a study that was done, and it looked not just at the Black community, but at the Hispanic residents. And the gap is 10 to 13% higher tax burden for property taxes for the same bundle of services. Another solution, supporting transit-oriented development, or what is called as TOD. There is an opportunity in the Black community where there is, there's two parts to this. One is supporting public transportation, and then the other is supporting development around that public transportation. And it's really both. Using an example of, this is an example that is near and dear to me because it's in LA, Crenshaw Boulevard, which is where we have our largest branch. They are building an underground train station, and they also used a overground, the Exposition train stop, as a way to get from South Central, which is a Black community in LA, to downtown LA. Underground will take people from South Central to the airport. Huge investment in public transportation. But what's also happening is that there's starting to be more development of housing around that public transportation. And it's an opportunity to build up communities that have in the past, because they have not been accessible by public transportation, have not gotten the housing investment that they deserve. Financial literacy, near and dear to my heart. There definitely is a gap in terms of financial knowledge in minority communities and in the Black community. We have invested a lot in sharing information. There's a link to our website. We actually had a conference with Tiffany Haddish and Damon John called One Transaction. That's what the link is to. If you go to oneunited.com/one-transaction, you can see it. We also offer free online training. If you go to oneunited.com/learn, you can see it. Those are just our examples. But one of the things that we find is regardless of the income, there is a need for more financial knowledge in the Black community. And so providing resources for financial literacy, for not just first-time home buyers, but even existing home buyers, as well as people that are looking for other ways to build wealth, is also very, very helpful. My last of my 10 solutions is just more investment in housing. It's been said that we need in this country 1 to 5 million more housing units. There's a lot of debate about, and there's a big gap between 1 and 5. There's a lot of debate about how many units we need, but we need more housing. But in addition to more housing, we need more housing options in all communities. And what I say for this is that each community does need to address NIMBY, or not in my backyard, to put affordable housing not just congregated in the Black community or Hispanic community, but spread out into all communities. Alternatively, there needs to be more workforce and market rate housing in the Black community that also maintains the cultural history. Both of those are important. And I actually give an example. Liberty Square is a public housing complex in Miami, one of the largest in the South. It's being developed. And one of the things that they are doing is, in addition to providing, lower income housing, they're also providing workforce housing, and they're also providing opportunities for home ownership. So sort of mixing it up. The reality is that, and I hate to say this, but there are going to be people that are not going to be happy with both of these. People are going to say, hey, you can't put affordable housing in my backyard. People in the Black community are going to say, hey, you're gentrifying our community by putting in, higher income housing. But the reality is that we need mixed housing options in all communities. And that's another way that we can close the racial wealth gap, become more equitable, but also to help our community see each other as human beings and not based on our race or socioeconomic status. The reason I started this presentation with a commitment to anti-racism is because all of these options are needed, or these solutions rather, are needed in a community simultaneously. And that's where I say is the part that is missing. I shared with you examples in Miami and Boston and LA of things that are going on, but there is not one community that is doing all of these things. And it does need to be a comprehensive view that, housing is a critical part of building equity and net worth, that there's been 350 years of discrimination and only 50 years where we've been working on this, and we're still not moving the dial, and that we really need to take a comprehensive approach and really do all of these things in our communities in order to close that housing gap and that racial wealth gap. So it is going to require, I call it an anti-racist approach that is going to help us get there. And I also will say that, some people will say, oh, this is too much, but it actually isn't when you look at our history. Now I'd like to answer questions.
Okay. Hi, Teri. Hi, group. This is Cheryl. I do have several questions. Here's one from Rebecca. Is there any way that appraisers are flagged for their undervaluing, or companies that are frequent offenders on this front?
That's a good question. We have found that when we push back, it's corrected. I do, and I'll talk to the team as to whether or not there's a reporting mechanism for it. So I don't know whether or not there's a reporting mechanism for it, but I know that when we do see it, we push back and they do correct it.
Okay, thank you. It says, are there any places where housing voucher users were allowed to use their vouchers towards mortgage payments? Because they should count as income for home buyers as they are considered for rental. Yes.
So Section 8 vouchers, as an example, can be used to qualify for mortgages. I don't think a lot of people know that. We try to communicate that to our community, and that goes to some degree to the financial literacy part. But yes, they are, yes, the answer is yes, they can be used.
Okay. Paul also has a golden opportunity he wants to share. Allowing additional homes per parcel in urbanizing areas is the community creating and offering a valuable property right and permission to build. Wouldn't it be better if the community could be assured that the additional homes would stay more affordable than the prevailing market price?
Yeah, that's a good question. And it is, I put it with the ADU example of, even you can have ADUs, but if people charge, an enormous amount to rent them out, that doesn't really help. I think that the mix of how, and I talked about this, I think it is important to have a mix of housing. And so, and having more housing will reduce the price for everyone. So yes, I would say it would be great if they can, say this should be affordable and not market rate. But I also think it's not an either or, and that fight tends to stop us from moving forward. So I guess my point is that we should really look for each community to have a mixture of housing options and focus less on one or the other, but more of all.
Okay, thank you. There's a couple of folks, actually, to us that suggested something that Nana wants you to speak to, and it's financial literacy for families that have pooled together for ownership that would like to continue but no longer qualify. Can you speak to that about pooling funds for home ownership but not qualifying?
Yeah. So, part of the challenge with, for instance, the down payment assistance programs is that, the income requirements. So it really makes it sort of a disincentive to join together with other family members, because when you add up all your income, you wouldn't qualify. And it is a disincentive. And, one of the things that that isn't included in my solutions, but the focus on multifamily property may be a solution to that. We are actually a big multifamily lender, and we really focus on, LMI low to moderate income communities and low to moderate income families. And we don't see enough of families pooling their resources together to buy, whether it's 2-family, 3-family, homes, and renting to themselves. That's an area that I just feel like is is missed. So I agree with the individual who brought it up. It does, when you pool your money together as a family, it does hurt you in terms of qualifying for programs, but it does help you in terms of buying multifamily property. And I think that's an area to look at.
How about he actually added another, directly referring to co-signing and co-borrowers. How does that change the picture?
Yeah, and it does change. Well, let me put it this way. For the first-time homebuyers programs, as I said, it can hurt you if you have a co-borrower that also, because their income, gets brought into the equation. So in that way, it can hurt you. For multifamily purchases, it can help you because it brings more income that would help you qualify for a larger property that then you can share. So it is, it helps you in some areas, but it hurts you in others.
Okay. Dietrich also asked, for doing larger down payment assistance, do you have any thoughts on how to target programs towards the BPOC community without running afoul with fair lending laws?
Mm-hmm. Yeah, and that is, going back to my anti-racism point. So it is a balancing act. And I'm going to use the bank as an example. We are a fair housing lender. And what we find is that a lot of people in our community that are Black and Hispanic come to us because they feel comfortable and respected, and they know that what we're trying to do in the community is to help the community. So we don't discriminate, but we basically do outreach to, our community to make sure that they know about these programs and they find us. So, fair lending does not preclude you from doing outreach, what's called affirmative marketing. What it precludes you from doing is basically discriminating in your lending decisions based on race. And that's, sometimes people will say, well, we can't do something specifically for Black people. Well, from an outreach perspective, a marketing perspective, you can. What you can't do, however, on a decision perspective, is discriminate based on race.
Okay, great. Akela has one. Can you explain the voucher program payment towards mortgage payment? The voucher payment towards mortgage payment.
It's considered income, just like if you're working, it's considered part of income.
Okay.
Yep.
And,
Simple as that.
and Paul has one. What's your perspective on limited equity housing cooperatives that acquire, own, and manage a multi-home property?
So I'm not exactly sure. I'm not familiar, or I'm not exactly sure what he's referring to. There are these land. What is the name of those programs? Why is this escaping me? Because we actually do finance them.
Is
There
that
are
the
these
community land trusts?
land trusts, yes,
Yeah.
that, you know, I mean, they're an option. Again, I think the important thing is to have options. And they're an option, and I don't know if people are familiar with it, where, you know, basically you buy the home, but not the land. And you could deed the home to a heir in case of, you know, death. But, you know, when you sell the home, you sort of have, there's some qualifications that you have on selling it. So you don't get the full equity of the home, but you do get some of the equity. It's an option. And I think that's, you know, again, for my, you know, what's shown here is number one. It's really important to have more housing options and not less.
Right. Any other questions from the audience? Otherwise, I would like to have you speak just briefly, if you could, about what's going on with your book and the idea of financial literacy. Because that, I know you spoke to it in general, but teaching young people, I have young people, and, you know, it doesn't matter anything about race. They don't know financial literacy. So I'm just wondering, how can we, even as parents, help, or how can we as a community help young people to better understand that this is a really critical area for them to learn?
Yeah. So the reason why I wrote the book is because it started with the bank wanting to adopt these schools, and we looked for books on financial literacy for the schools that were in urban communities, and we couldn't find any. And you know, a lot of the books for children, you know, had sort of white picket fences and lemonade stands, and, you know, which really doesn't go with the communities that we live in. And so I, you know, sort of thought I was going to write a pamphlet, and it ended up being a book. And what I was saying, it has been very successful. We actually have a financial literacy contest every year. We've had it for 10 years for students to read either my book or any book and write or do a, you know, art project on what they've learned. And we give them, you know, 10 kids a $1,000 savings account. It's called the I Got Bank Financial Literacy Art and Essay Contest. And it helps us sort of get the word out to youth, and as well as their families, because once the kids read the book, you know, it ends up being a family conversation. So we've done a lot of work in this area. What I always say to people is that banking is boring. Banking is boring. I mean, that's the, you know, I joke about it. We try to make it more interesting. You know, you have to sort of meet people where they are. You know, if you read my book, it's funny, it's, you know, entertaining, but there are also sort of lessons built in there. You know, if you go to our website, if you go to One Transaction or oneunited.com/OneTransaction, I mean, you see, you know, Tiffany Haddish as well as others that are entertaining while they're also sharing knowledge. So, you know, whether it's podcasts, I mean, there just has to be a lot of different ways of sort of getting financial information to our youth and to our families that aren't the traditional ways of like going to school and having someone lecture to you. And so that's how I think financial literacy should be developed. You know, I wish there were a Sesame Street of financial literacy, you know, the ABCs and then the 1, 2, 3s of money.
That's really great. And Anne agrees with you. When banking is exciting, that's not good. Thank you, Anne, for that comment. All right, yep, everyone, thank you so much. This has been truly an informative. I've been sitting here learning just a tremendous amount, and I can tell by the number of questions and some of the other things you weren't able to see with just people even responding to each other here, that this was a very, very dynamic and informative presentation. And I hope all of you will go to the website, pull out what you can, share this with other people. It will be on, like I say, this is recorded and available. This is a valuable thing to share. And Teri, we just can't thank you enough for spending the
Oh,
last
thank
few
you.
minutes with us. All
Thank
right.
you. Thank you. It's been enjoyable. Thank you.
Take care, everybody. Bye-bye.